Good afternoon, everybody. Today I'm chatting with my old pal, John Feneck. In today's interview, we discuss the tariffs, whether they will be good or bad for precious metals equities, as well as a few penny stocks, or should we say junior mining companies that John likes right now, as well as what John thinks we should expect out of the stock market in 2025. Also, if you're serious about junior mining investment, you might want to check out John's event, the Commodities Global Expo 2025, which will go down at the Four Seasons Fort Lauderdale from May 11th to 13th. This is your chance to get to hear from some great speakers, as well as get to ask questions directly to the CEOs at the event. If you're interested in the event, check out the link in the description. All right, everybody, enjoy the interview. John, thanks for joining us.
Good to be back, Steve. Thank you.
So since we last spoke, there's been quite a bit of we'll say friction, volatility. I don't know which word you want to use to describe it when it comes to the tariffs. One day they're on, the next day they're off. The latest I read, and by the time that this gets edited and published, it'll probably change 3 times. But the latest I heard is that they're going to be paused now until they sort stuff out. What's your read right now on what's happening with the U.S. in regards to trade policy?
So a lot of smart people last year were saying that Trump is bluffing, right? Like all this talk about tariffs was just a rhetoric. And obviously now all those people are, have a big foot in their mouth because this is clearly real for Trump. And you could argue that he's kind of, bullying these countries into deals or what have you, but they are being implemented, right? So this isn't fake and the markets are reacting accordingly. I think the biggest story out there that hasn't developed yet is US versus China. And you can see that in the FXI. I just looked at the chart this morning because we shorted the FXI again today. I don't think China is going to be, insulated from risk. And clearly the FXI chart shows an opposite story. But as a contrarian, I look back and I shorted China in 2007, made a ton of money going into 08, 09. And I think that frothiness is existing in their stock market right now. If you look at FXI, for example, that's like the SPY, right? The S&P of the US. That's their best and brightest companies, completely broken out. From what I remember from the chart, February of 2022 was the last time the price was this high. So I don't usually bet against things that are breaking out, but I just don't see where China is going to continue this kind of upside when, Trump has them in his crosshairs.
Do you think that the tariffs even make sense? I did a video on it today, and I mean, I suppose that there's probably like somewhat of an argument for it when we're talking about labor. Like one country is basically offering to do stuff much cheaper than the other country just in terms of people. But when we start talking about resources, which is really the space we're in, I think that the argument's very different. Like one example here would be potash. If we take Nutrien, they could produce potash for I think it's $94 a ton. Whereas if we take a small scale producer in the States like Intrepid Potash, they do it for like $130 a ton. So it's like a 35% increase just going from US to Canadian production, which means that your producers in the US are still going to use Canadian potash. They're just going to pay a 25% premium. I don't know that there is a way to actually do it cheaper by just magically increasing production of potash in the US. Or we could talk about coffee is another example. I know that we don't fully have tariffs on, say, Africa or South America, but it's not like you're just going to magically start making coffee in America, just as an example. Do you think that this is just sort of a negotiating tactic, or do you think that when we're talking about raw materials, there actually is any logic to it?
I mean, it's really difficult to say this early on. I will point out just when you say about Central America, that we kind of forget Colombia was on his radar before all of this happened with Canada, Mexico, China. I mean, and that lasted all of 10 hours, I believe. Colombia acquiesced. So, I think the US is going to win a lot of these battles. And, this isn't a political statement. This is just me reading what I'm seeing. and seeing, Canada's first reaction was like, "Oh, let's play ball." And then this reaction this week was like them digging in. But ultimately, I still think they lose in a US Canadian, back and forth. I was just in Canada for 3 days, and I was talking to a lot of Canadians that all were telling me the same thing, like, "We don't have a chance." So I just feel like, we're in a new paradigm, I had a dinner this week with, a very intelligent group of people, and we were going around the table about probabilities of, like, what, people thought for gold, silver, the broad market in general, and I said, one of the people brought up that there's a close to 50% probability that the US market will be just fine and keep cranking, and I said, uh, I don't wanna say what I said, but I said, "Absolutely not," and they said, "Why?" And I said, I mean, look at the news flow. The news flow is telling you that, I mean, look at the tape, right? The last 2 weeks, the Nasdaq starts out pre-market up and then finishes down almost every day, and it's doing it again today. It's like, this is showing you a top is in the broad market, and, I mean, even my YouTube partner, Don Durrett, disagrees. He thinks we're going through March and maybe even the April. I don't agree with that. Look at the action, right? The Russell is something you need to be looking at along with the Nasdaq. The Nasdaq's super inflated, but the Russell has let us down in different corrections every single time. Go back to 2000, 2008, 2018, and 2020. IWM is the ticker on the Russell 2000 ETF. Go take a look. It's right there, and it's doing it again. The Russell was up only 11.5% last year. That sucks. I mean, the S&P and Nasdaq crushed the Russell last year. So what is that telling you? It's telling you that there's a broad there's a lack of broad leadership in things like the S&P, right? It's a very narrow leadership, which in my view is technology stocks. And when these technology stocks go the other way, I've been saying on your show and other shows for 2 years now, you need to meet with a financial advisor and be less greedy because you are going to get smoked in your 401k. There are a lot of people out there that have heavy weightings to the Nasdaq and the S&P or something similar to that, Steve, without even knowing, right? They own large cap growth at MFS or Fidelity or Vanguard. Trust me, I spent 25 years of my career in the mutual fund business. You're going to have a very high correlation in that fund to something like the S&P 500.
You think that we're gonna see a point where there is more of a move towards general stock picking? And because right now, it just seems that what sort of controls the market, and getting back to that, you got your big tech stocks, obviously, like they kind of dominate the headlines if you're watching CNBC, or we're just looking at how ETFs work. That it's I don't know the stat off the top of my head, but we hear the stats like the top 7 stocks on the Nasdaq basically make up the majority of the gains on the S&P. Um, does that How does that change? Is this just a function of ETF flows? At some point, do people start looking at a company like, say, a Newmont who's now generating, like, I think the number's like $2 billion a quarter in free cash flow? At what point does that actually start to change?
Well, it's going to be slow for mining, and I'm not going to BS anyone that's listening here. It's not going to be like we're going to go from 0.1%, which is Newmont's in the S&P, to 1.5%. It's not going to happen overnight. But if you look at Agnico, AEM, great looking chart. They're crushing it on all levels, cash flow, earnings, revs, everything. And then look at their AISC, right? 13.20 an ounce. I mean, they're just printing money at Agnico right now. So, I think they could be included in the S&P. Look at Alamos, AGI, another great story there. Look at Kinross, KGC. You can go down a list of things that actually have worked. I know we talk a lot, Steve, about things that may not be working, but like, let's acknowledge that there are things working, and people need to be more aligning themselves with professionals like myself that are finding these nuggets in a sector that isn't overperforming by itself. Like all ships are not being risen at the same time right now, like we saw coming out of COVID. But we will get to that point again, and I'm thinking it's like somewhere between 3,000 and $3,200 gold when people are just like, holy cow, I'm really missing the boat here, and there's a FOMO move. in our sector. I can already feel it in silver. You can see it happening in silver. Like, look at that day we had yesterday. Just silver crushed gold. So the reason being is um, the gold to silver ratio is 91 on March 3rd. When I started PDAC this week in Toronto, it was at 90.9. You know, anytime you're at 90 plus on the gold to silver ratio, you just hold your nose and buy silver, or you buy silver equities because you're going to make money on that trade every single time going back to 1980 except twice. Yeah, that's like the highest batting average in mining, you know? Buy silver when gold to silver ratio hits 90. It's like unbelievably strong and correct to do that. So we bought more silver at 31 recently, even though I hate buying silver over 30. I like buying it cheaper. Last year we bought silver at 24, 25.01, 27 and change, and then again at 31. So we're not buying it, you know, into the 40s, 50s. I'm not going to chase it, but in the 30s here, clearly holding $30 an ounce. Yeah, I'm going to buy it again. I mean, that's a really bullish pattern we're seeing develop.
And I'm pulling it up here and just looking at some of the majors here, and I know people go, "Okay, well, when's the capital going to start to flow in?" And I suppose I was just doing that. But to your point, we got Newmont, or these are the last one-year returns. Newmont's up 31%, Agnico Eagle's up 96%, Barrick up 25%, Kinross is up 126%. And then if we want to look at some of the silver names, we got First Majestic's up 25%, Pan American Silver's up 95%, Hecla's up 41%. I mean, these are strong wins. I think that a lot of us though we're sitting back and we're going, okay, well, but the price of gold's basically gone from say 1,400 to 1,500 dollars back in like 2018 to here we are in 2025, 7 years later, and it's doubled. Why is it that we aren't seeing this this operating leverage expansion work its way into the names? And I suppose we are. And even just hearing about those returns, which are solid 1-year returns, there's still a lot of room to go here.
Yeah, because we're coming off of a very low base. You know, if you look at historical numbers on something like the HUI, which is, you know, predates the GDX. I mean, HUI right now is still, let's say it's at 330. I don't know the exact number right today, but like, you know, over 350 is what you want to see. You want to see it break 350 and hold there on a few closes and then break out, because that will be an indication for momentum buyers to get into our sector, and in a name, many of which you just named are included in the HUI, right? Or GDX. So why wait? I mean, like, you know, we're moving towards 3,000 plus gold. I don't think many people disagree with that. So at 29.10, as we're recording this, like, why not? You know, it's only a 3% move in the price of gold. It's not like it's a far fetched, you know, idea that this is going to happen imminently. So, you know, most of the banks were calling this to happen by September or December. They're dead wrong again. Banks are always wrong on gold. I mean, go back and look at 2016 January. Oh my gosh. I mean, I remember Wells Fargo was at like 950. Other banks were like around 900. It was like it never happened. We never crossed 1,000 to the downside. People are overly negative in our sector in general, Steve. And then we're just getting to a point now where some of the banks are turning positive, and I hear at these conferences like Toronto, isn't that a bad thing, John? Isn't it bad that all these banks are going, you know, to our defense now finally? I'm like, why would that be bad? Like, this is major capital saying we believe in your sector for the first time in years. This is a really good thing.
So let's talk about specific names that you're bullish on right now. You've been one of the few guys who will actually hop on our show and put his neck on the chopping block with names that you like. What are those names right now?
So I just got done with 24 CEO meetings in the last 3 days in PDAX. So I have a lot of information in my head floating around. I'll start with one that I think you know that I've been in the critical mineral space for years, and I've been really pushing on antimony and tungsten in the last 2 years. I met with a tungsten company, American Tungsten. The ticker is DEMRF in the States, TUNG in Canada. Look at their website. Great site, great presentation deck. They put a senior guy in the industry, on top of the company as CEO. They're in Idaho, which is the eighth best jurisdiction in the U.S. And what do? They smartly raised money into strength, right? They just did a financing at a buck 60 Canadian. They closed that in the end of February. Now the stock, by the way, a buck 60 Canadian equates to like about a buck 10, a buck 11 US, I think. So stock's at 81 cents US as we started recording this. I mean, why is it trading, 30% below where it just got financed? It's insane. I mean, it's a great buy right now, in my opinion, because that gap will get narrowed. I just read a piece from another tungsten company that talked about like applications for tungsten that people weren't even considering, and that they think that demand for tungsten will increase 10x over the next couple of years. Right now, as we speak, China controls 81% of the tungsten market, and Russia and a handful of others control about 9%. So that means 10% of all global production in tungsten is produced in places that are not China, Russia, and parties that would never deal with the US to begin with. So I think there's a move towards um, tungsten getting DoD money as soon as this year. Like this isn't a phenomenon we're gonna have to wait for a year or two. I think that Fireweed FWEDF was the first to get their grant in December. They got $35 million, not insignificant. I think a lot of these other smaller companies will get smaller chunks of change in a non-dilutive way. But for those that don't know, a grant from the DoD means you get free money. You know, so I think that's an interesting one, American Tungsten. It's been heavily shorted here. It's clear. You look at level two, you can see Morgan Stanley and some other entities on the sell side. It's like Morgan doesn't own anything.
So forgive me if I'm wrong here. This is just what I've heard about the name. They previously raised money at like 25 cents, and then their last raise here, I think you said it was $1.60. This is in Canadian dollars. You think that sometimes this is an issue with companies where they really should be taking money along the way to kind of help sort of stabilize the share price? If like, we're talking about mining here, these are companies that are going to have to raise money. Should they be? You think that they should have like tried to do some sort of a raise around like 50 cents or 75 cents to just try to narrow that gap a little bit?
Well, what happened with this one, because in full disclosure, bought into that 25-cent round, right? It was like never at 25 cents Canadian. It was there for a blip, and then the stock just took off based on tungsten news. So I'm not defending American Tungsten, but what I'm saying is when you set a price with the exchange, it's very difficult to change that price. You can't just go back to them and say, well, hey, we're just going to make this 40 cents now because look at all this news flow, TSXV. They don't give a shit, honestly. Like they're not going to do that. So it was a great deal if you were able to do the deal. But Steve, that's one of the reasons I don't include my performance on American Tungsten in my performance numbers, because I think it's BS that guys go out there and say, "Oh yeah, I'm up 200%." I mean, that's up. If you look at my website right now, we were up 25.7 last year. That's our public number. If you include deals like American Tungsten, we were up over 100%. Like, I'm not going to put that on my website though, because most people couldn't do the deal, right? So, yes, I agree with you. Somewhere in between 25 and a buck 60 probably would have been nice. But the cool thing about the structure is these guys really created a share structure that's pro investor. They didn't go out there and grab money from the usual suspects that you and I have talked about before. They're going to blow up the share structure by selling it 4 months in a day.
So, we got American Tungsten. Any other names you want to throw out there?
Well, I just did a newsletter dated February 28th, and in my I for those that want to check it out, it's only $65 a month. I have an in focus section every issue, and this section was entitled "Stocks with Tighter Share Structures," because I think from doing this for a long time, Steve, I recognize that sometimes you get emotionally attached to something, right? You're like, man, this thing's got to work with 30,000 gold, right? But then you look at the share structure and it's got 400 million shares. It's going to work, but it's going to work a lot slower than something that has fewer shares with good shareholders. So in Canada, I met with two companies run by the same CEO. So there's Quest Corp. We mentioned that on your show one other time, I think. QQCMF in the States, QQQ in Canada. I know I mentioned it around 4.5 cents US, maybe five. It's trading at 8 now, US, but it hit 10 or 11 on really good volume. This is a company that basically had one project in Canada that went to pivot last September and get a project in Mexico. But
Which
when I
which which we mentioned before, we our first DD on the go, you can see the site visit of the La Union project, which is that exact
okay,
project you're talking about. on our
It
YouTube
is that
channel.
exact project, yeah, and I have not been there. I don't know probably as much about it as you do, but I'm excited about Mexico since Scheinbaum's been in, right? So I'm trying to go to CEOs. I'm making a lot of outbound calls and saying, "Tell me about why you bought this and tell me how you're gonna get it across the finish line or at least advance it." So they needed money. When I mentioned that last on your show, I think I even said they probably gonna have to do a financing. They are in the middle of doing that right now. They're gonna close that. I think they raised more than they hoped. So, I mean, that is really bullish, for a stock like that to now be able to drill that in an environment where, you know, Avino, ASM just got their permit. I think Agnico, Discovery, a bunch of companies are gonna get their permits this year in Mexico. And that should, bring some more interest to the stock, now that they can pivot either way. The other one that SAF runs is called Iron Metal Resources, which is IMR in Canada, IMR FF in the States. And this one I haven't bought in a while, but it's it's got 7 million shares out, like it's got the ability to go after gold in a great part of Canada, and you can try to envision as someone who's an investor with vision, hey, they could probably raise 2-3 million bucks as well in a hot gold market and go drill that thing, and then here it is with 7 million shares. Who cares if it goes to 20 or 30 million shares? It's still super tight. I know you and I have talked about Golden Caribou at least 2 or 3 times, and Golden Caribou is probably closing in on 80 million shares now, right? Still tight, but not as tight, right? And so, like, I think some of these stocks that are in the phase of right now raising money early, like American Tungsten or IMR, like you got to get into these things now because eventually, if they get any love at all from the market, they're just gonna be high flyers. And in terms of percentage growth, by the way, I'm not saying they're going to go to like easily go up from 5 or 6 cents or wherever it's trading to a much higher price. Lastly, I'll mention two other companies. One's in Mexico to follow that theme. You and I have talked about Sonora Gold before, SMOFF in the States, SGO in Canada. I talked to management there a week ago. Things have been slightly delayed by Scheinbaum. They thought that they'd have their permits in hand by Q1. I don't think that's going to happen in March, but I think it will happen by May. So, I'm pushing back my timeline a bit, but again, they've told me multiple times now, as soon as we get that permit and everything's to go, we're going to be in production in 11 or 12 months. So again, look at like having vision to say, here's a 6 cent US gold stock that is going to get their permits most likely because they're in the Sonora state, which is right near the border of Arizona. It's not like in a horrible part of Mexico. And I hear the same thing from other CEOs that are around them in that same province. So that's one that we like. And then lastly, I met with a new company for the first time called Zeus North American Mining, which is ZUUZF in the States and Zeus in Canada. The reason is really what attracted me there, Steve, is a proximity play to Hercules. Hercules in 2023 just killed it. They haven't done as well since, but they are just a couple kilometers away from Hercules. So if they're on the same trend with Hercules, which is not a for sure thing at all, then I think that stock has a lot of potential because when I asked the CEO, like, who owns the shares here, he's like, me and a handful of guys own like 50% of the float. So again, you see a number like 65 million or 90 million in a presentation deck. Sometimes it can be a little daunting because you think that there's all these shares out there. But I said to him point blank, I said, what would it take for you to sell shares? He's like, well, we already just passed on an offer at X million dollars. So if that tells you anything, we're not selling at this price.
All right, well, John, last question for you. If our audience wants more of your commentary, where can they go to?
Yeah, just fennecconsulting.com. You can click performance, see our performance for 9 years. We'll have our 10-year number in December this year. We're very excited about that. It's been a lot of work, and I want to put up a great 10-year number. So we're working very hard this year. We have, the newsletter, as I mentioned. We have real-time updates, which people can subscribe to as well, which I think are extremely helpful in this kind of market where there's a lot of news flow. and we do that, through email daily, or they can just buy time on a phone, and just say, hey, tell me about PDAP. What were your top five, meetings? Stuff like that. I'm not going to put it in an email, but I'm happy to answer those questions for clients.
All right, well, John, thanks very much for hopping on here. I always look forward to our chats, and let's do this again soon.
Sounds great. Thanks for having me, Steve.
All right, everybody, thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.